Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. We're taking a look at a morning where we are preparing for day 2 of Jerome Powell's testimony. So he's catching an Uber from the the Senate Banking Committee, and he's going to jump on over to the House Financial Services and get peppered with essentially the same questions. So this is that semi-annual 2-day testimony where he discusses the economy, monetary policy, where rates are, employment, since that is a part of the Federal Reserve's dual mandate. So day 2 really isn't as impactful as day 1. There's not anything that necessarily is going to be asked or answered differently, although anything can happen. But usually day 1 is where we get the gist of what Jerome Powell wants to communicate to the market. Now, what's really important about day 1 is he did 2 things. One, he really did not in any meaningful way disrupt expectations for Fed rate cuts in September. He could have easily said that conditions are not right. We're not thinking sooner. We're thinking a little bit later. And he could have easily evaporated the expectations for rate cuts in September, but he did not. Right now, remember, he's perfectly aware of where these things are. So if he needs to, he will, but he chose not to. The other thing that he did is he kicked the can down basically to Thursday at 8:30 a.m., which is to say that we are still very much meeting to meeting. In other words, they don't have a date at which they know they absolutely want to cut rates. At least that's what he's saying. Because remember, he can't paint him and the voting board into a corner. So he said, look, we're going to be very much contingent on the data. Last week, it was our week before last, it was last time it was non-farm payroll. This time it's the CPI. So he basically said, look, if inflation continues to cool, we'll cut. So cooler means cut. That means CPI on Thursday has got to be at least in line with the core CPI month over month, the CPI month over month, and the CPI year over year. If you're wondering what this quirky core is, I usually don't pay a lot of attention to core because it's just a ludicrous number. What they do is they exclude food and energy because food and energy tend to distort the underlying trend. Because, I mean, who needs food and energy? I mean, that should not be part of an inflation number, right? I mean, yes, I completely accept the ludicrous, amount of attention that we place on equally ridiculous numbers. But this is the game we've chosen to play, right? I always think it's funny when football where, for 90% of the game, the refs just kind of eyeball the football and put it down. But then all of a sudden, it's time to bring the chains out. It's just that way in life, right? So here we are. We're going to be looking at CPI. Yes, a ridiculous number, especially that core number. But if this is what Jerome Powell has put in the spotlight, this is where the reaction is going to be. And this is where we sit here on Wednesday. As long as he keeps with the messaging of yesterday, we'll likely continue to see these, moderate moves to the upside. So what is the reason for the market to keep moving higher? It's really simple: rate cuts. And as long as inflation remains flat to weak, and as long as jobs remain rather weak, because he did cite that there were some difficulties in the labor market, he acknowledged that. That's going to be another reason that they would cut, which is probably why September is high in expectations, because the May revision in the non-farm payroll was a whopper. It was a significant revision to the downside. So then, and unemployment clicked up 1/10. All right, so you've got the jobs kind of putting the pressure on them to cut in September. If inflation lets them, look, as long as the plans are to cut September, November, December, even just November, December, we will continue to see moves higher in the equity markets. Okay, let's flip it around. What would be a reason for a move lower? There is always the unforeseen. So please, let's not start imagining what could happen, whether that be geopolitics or aliens. It doesn't matter unless it's something we can use for timing. So let's accept that we really don't have a narrative where there will be a significant move to the downside. We simply don't. The most bearish catalyst in the world of the real that we have right now is if inflation metrics like CPI and PCE are still hot, if they tick up. That is a real, measurable, and these are expected numbers, right? So if we see ticks up in CPI this week, if we see ticks up in the PCE, the Federal Reserve is going to have to tap the brakes in September. That would create a little bit of a pullback as we have to reassess what no September rate cut would mean and what November, December rate cuts would mean only instead for this year. By the way, the Federal Reserve expectations are to keep cutting into the Q1 of next year. So we're just talking about this year alone. All right. With that being said, I'll tell you, gang, if when we do these shows, we have these discussions, please remember, I'm just really talking my book straight up. I'm looking for long positions. I can't remember the last time I bought a put as a swing. So I am talking my book, as should anybody in this position. Who cares about analysis and what we think and what we feel and what the tea leaves have to say? I'm talking my book. We are long a number of names. I want to continue to add to the long side on dips in a number of names. So it's our job to talk our book. Now, if I want to talk clickbait, I'll talk about all the things that might be out there in the pretend land of why we should be down at 19,000 in the NASDAQ, or what are some of the ludicrous numbers I've heard about the S&P? I mean, people have said we're going to 5,100. Really? Okay. 500-point pullback in the S&P because, right? So if we can't fill in the blank on that, remember, let's just buy the dip. It's been working all year. Right? It's been working all year. And sometimes I feel like that's kind of the toughest messaging out there to get, which is, again, trade what you see, not what you think. And if the markets are moving higher, buy the dip. Could it be that easy? Yeah, trading is not that complicated. It really isn't. It's just staying disciplined to the process of what is a relative outperformer, what are the best examples of relative outperformers, and being patient enough to wait for your pitch. It's like sports, right? You can't swing at everything sailing over the plate. All right, question on CRWD. This has quickly become a crowd favorite, pun intended. It's in an uptrend. It's been going in and out of uptrends since late May. So if the tendency is for uptrends, even when we transition into chop, I would still be looking for an opportunity to get long. This one's a really cool one. And for those of you that like compression markets within the context of a trend, so if you're a fan of the squeeze, for example, or any kind of compression to expansion setup, right? What you want to do is identify the range of the compression. That's step number one. And here I use the automated Darvis to do that. So that's the first thing that I'll look at. Fernando, that's the first thing that I'm going to look at. The second thing that I'm going to look at is where the lower end of the range is, because my expectation is for a continuation of the uptrend. That's the second thing I'm going to look for, right? So I found the range. It's been largely bullish. I would expect upside continuation. So I want to buy as close to about 371.20 as possible. 371.30, sure. Anywhere in the lower half of this choppy range where the Darvis has identified this narrow channel would be fine. But the closer we are to the low, it does two things. One, it allows me to at least consider, say, 395, a potential optional target where I can scale out and or move to break even. And it doesn't relegate my entire position to hopes that 395 is the trigger for further momentum. I can be sitting down at the lower half of the range or even at the low of the range with calls. And that way, if we continue to move sideways, look, face it, gang, we've been moving sideways for a month. What if we move sideways for another month? Probably not likely, because I believe we've got, let's see, I'm trying to think when our earnings coming up, I think the end of August. But nonetheless, we could continue to move sideways for a while. So consider in a sideways market, we're expecting a breakout, find the lower half, the lower quarter, or the very lowest edge of the range, position your buy there. And then that way, the entire range is unrealized profit and an opportunity to scale out if you'd like to, before we get basically phase two of a breakout, which is the breakout and follow through itself. So that's the way I look at CRWD. All right. Question on AMZN. on a daily time frame, would I put on a long call at this level? No. No, editor, we're already long Amazon from, lower daily price movement range. So no, I cannot at this level. I would not at this level. I'll do what I did before, which is wait for the green candle to sink into the gray zone. So for a bullish candle to sink into the support of a volatility zone, that's that gray zone. And that's what I do. So we got to wait. Probably the hardest thing would be just to kind of sit on your hands. We're long from about 191 and change, 192, right? But where are we long from? About 192. It's been a few days. We've so we're managing. Yeah, here's what I can tell you. We did scale out the other day just in front of 200. We've got July 12 and July 19 options. So I'm looking for some momentum above 200, but I would not position myself long here. I'd wait for another daily price movement range. All right. So wait for another move like what we saw on the 28th. And actually, that's when we set this up, the last day of the quarter. So it gives you an idea of where we're long from. All right. Next up is, thank you for the question, by the way. AB. Okay. I don't know that name. Do you mean Airbnb, Anthony? ABNB? I don't know ABAB. All right. I'm going to presume it's Airbnb. Okay. So yes, liquid on the options. It's one of the strength names right now. Absolutely. If you look at relative performance where Airbnb hangs out, it is a strength name. As far as what I want to do with something like Airbnb, we're not ruling it out, Anthony. Yeah, I think I talked about this in the room the other day. And it is weighted in consumer discretionary. So it's just low weighted. So it is weighted in consumer discretionary, XLY. I believe it's sitting in the 11th spot. So it's pretty far down, but it's still weighted in consumer discretionary. And probably even more notable that there are only 4 trends in the top 11 names in consumer discretionary: Amazon, Tesla, TJ Maxx, and Airbnb. So I'm not ruling out potentially looking at DPMRs on this one, but for the most part, I would look for a mean reversion, likely around 150 on Airbnb before I get long. So that's what I would be looking at on Airbnb. Yeah. What about BABA? All right. So BABA. So when I'm looking at BABA, I would keep an eye on KWeb. And that's where we want to focus. Here we go. That's where we want to focus a lot of our attention because I want to think about that stock, BABA's place in the broader averages and in those heavily weighted sectors. Aside from that, I can't buy BABA yet. I've got red candles. That's a no buy right there. I don't necessarily think the short's out of the question. Quite frankly, anywhere between $76.70 all the way up to about $79.50. Maybe at 79 is fine for long puts on BABA. If you're looking to the long side, I would wait. I would wait for price to get above the equator, which would be, let's see if it can stay above about $76.80, $77. Let's also see if we can start printing some yellow neutral candles. Right now with the red candles, that means participation is bearish and price is bearish. So that's just a really tough place to be a buyer. It'd be better to be a short seller or long puts for now. And if you're waiting for the opportunity to get long, let's wait for it to get above the white dots. Let's wait for it to at least print some yellow neutral candles where we can see the bearish pressure in terms of price and participation are sort of waning. And then we can take advantage of at least a neutral environment above 76, where it will probably be a little bit more on the long side of different scanners. It'll be on the long side of interest versus, let's leave it alone because it's below that equator. So I'd be cautious there on BABA for those reasons. All right. All right. Next up, actually, let's go take a look at bonds before we get started. We look at the Fed fund futures. We looked at the probabilities for September rate cut. So let's take a look at what's going on with bonds. Bonds are in a range. I really don't know what to do. They've bounced off the 116 handle. They've been able to get above 118. And really the next stage for bonds is to find itself above the 119 handle. Now, why would that happen? If the Federal Reserve is going to be pressured into cuts because of the combination of a disappointing non-farm payroll. Again, it was really the revision that was a disappointing part of that number this month. And then if CPI is cooler, they've really got to cut in September. There's no reason for them not to, because then the data would basically open the way. On one hand, the rates higher for longer are putting pressure on the employment picture. And then as long as inflation is cooler, then they've got no real reason to say, well, we're going to hold. For what reason? They've actually really, as clearly as the Federal Reserve is willing to be, said, if employment is a problem, it is. And if inflation cools down, it has been, we'll cut. And so that's why September is as highly, as you can see, discounted, expecting rate cuts as it is, right? 73, we're just about 6.5% from what I would consider to be largely fully discounted, which is once we get through the 80%, that's largely fully discounted. And at that point, the Federal Reserve has to accept we either give the market what it wants, which is that quarter point cut on September 18th, or we've got to talk them down off that expectation between now and September 17th. And so that's where we sit. It's not an accident that Jerome Powell did not decide to bring this down, right? The target rate probabilities, they're keenly aware of what these are, believe me. So if he wants to bring these down, if we've gotten a little too far ahead of the program, they will do that, okay? So this would be his chance. If he said, oh, they really didn't hear me, I need to bring this expectation lower, he'll do it today. If he doesn't, gang, he's really waiting on CPI to do the talking for him, which is to say, if it's cooler, this will definitely shoot up to 80%. Because at that point, there's no other reason for the Federal Reserve to hold in September, which right now is only less than 23%. All right. Next up is we took a look at BABA. We took a look at we took a look at Amazon. I hope everyone is aware that I am bullish. We could see a pullback. By the way, again, what I mentioned earlier too was that we could see a pullback if CPI is higher. If CPI is higher, hotter, and again, I don't mean just arbitrarily, I mean higher or hotter than what's expected. So take a look at the three metrics. The two most important are the month over month and the year over year CPI. I don't know who pays any attention to core because that's ludicrous. But what we want to see is these numbers coming in below forecast and preferably below previous as well. But if they come in above forecast, if they come in above previous, look for a pullback into Thursday's session, because that's going to likely very much evaporate expectations for a September cut. And it may not, but it's definitely going to wobble it a lot. All right, gang. So that's what we've got. I think we're caught up on the questions. So we'll wrap it up here. As always, we're here every day from 9 to 9:20 or whenever the questions are done. We'll prepare for the morning. I'm not going to be doing a lot of active day trading likely with Powell today, but it's going to be a little bit easier to at least open that door today because it's day 2 of that Humphrey Hawkins testimony. All right, gang, be good to each other. Heads up, CPI is tomorrow morning at 8:30. I'll see you shortly after that here at Charts and Coffee. Be good to each other.